In this presentation, we will be continuing on with our partnership comprehensive problem, adjusting entries. We are on the adjusting entries tab. We will be doing an adjusting entry related to wages or salary or payroll. For more accounting information and accounting courses, visit our website at accountinginstruction.info. So let's first go through our rules, knowing that we know something that has to do with payroll, and then go through our adjusting process rules to see if we can see which two accounts are going to be affected and which ones will be debited and credited. The date will of course be the same as of the end of the month, the date of the financial statements. We know that according to our rule, there's not going to be, for adjusting entries, there's not going to be any cash affected. There's going to be one account that's going to be a balance sheet account, or more specifically, a balance sheet account or a liability or asset account, not including cash. And if we think it's going to be something related to payroll, and we look through here, we'd say, how about wages expense or wages payable? Wages payable looks like it's related to payroll. That's one of the contenders. That's one of the accounts we will be using. If we look at the accounts below the equity or the income statement accounts or the revenue and expense accounts, there will be a account down here that will be used with the payroll adjusting entry. And if we go through here and say, how about wages expense? That looks like the one. So we're going to say it's wages expense. And then we can know that these are all expenses, and expenses only go up. They go up with debits. So we know that we're going to debit wages expense. So I'm going to copy wages expense, right click and copy. We'll put that up top in C14, right click and paste. 1, 2, 3. Okay, and then we know that if we're going to debit that one, the credit's going to go, of course, to the other one that we're dealing with here, which is wages payable. So we'll just right-click and copy that. Put that on the bottom in C15, right-click and paste. 1, 2, 3. Now we're just going to go ahead and indent this, so it's already done for you most likely. We're going to go to the Home tab, the Alignment group, and increase indenting. So that's what we have. We can know all that without really knowing what's going on, except for that we know it's related to wages or payroll, and it is an adjusting entry. Now we need to know what we're talking about here. So what is happening with the adjusting entries is the payroll, we're going to run payroll on its own kind of process, meaning it's more of a cash basis. Payroll is complicated in practice because we have to have all the withholdings and whatnot. So we want to basically tell payroll department, you do what you do, make it as easy as possible. You run whatever cycle you want to run. If it has to be in a cash basis, then that's fine. We don't want to mess you up trying to make it perfectly accrual throughout the entire payroll process because it's complicated enough. What we will do is make an adjusting entry as of the end of the time period for any kind of crossover, any timing differences that need to be made, just to make the financial statements as of this point in time, the financial statement date, correct. So, for example, if we had payroll that was going to run for every Friday, we process payroll, then what if the end of the month landed on a Wednesday? There would be 3 days of work that would have been done that isn't going to be paid till next month. And really on an accrual basis, we need it to be recorded this month. If payroll was working all the time on a perfect accrual basis every hour, we would be saying, hey, we owe employees more money, a payable, and an expense related to it until we actually pay them up at the end of the time period. But that's too much work. That's way too much work to deal with it. I mean, it would be, especially if we had to deal with withholdings every hour. That would be pretty crazy, even for a computer. So what we're going to do then is just say, okay, we'll just let payroll run, and we're going to make this adjustment for that time period. Now, we won't do the actual calculation here. We'll just give you kind of an example. If we had, for say, $5,000 for a 2-week time period, and let's say 3 days happened before the 31st, and we're going to pay $5,000 sometime at the end of the 2-week time pay period. And we would know that during the adjusting entry process, because note that we're not doing the adjusting entries as of the 31st. I mean, we're doing them as of the 31st, but not on the 31st, because we would need to get this information all input and then start doing the adjusting entries. So it's probably sometime in mid-January that we're actually doing these adjusting entries as of the 31st. So we know what the payroll was in February, and we can go in February and say, okay, the February payroll The first payroll that was paycheck given in February was $5,000. 3 days of it was in the prior pay period, were days that were worked before the 31st of January. So how can we then, break that out, get those 3 days into January? We could try breaking this out into a daily time. So if there's 2 weeks and then we're just talking about weekdays, we could try a ratio and say, well, if we break it out by day, and there's 10 days for 2 weeks, 5-day-a-week work weeks, we could say that there's $500 per day. And if there are 3 days that were worked, times 3. And that'll give us the 1,500. So there's different ways we can estimate that, but some kind of ratio would be the easiest kind of way to allocate this. So once again, we're just going to say equals in cell D14. We're going to put the 5,000 total payroll divided by the number of days in the pay period 10 times the number of days before the end of the month, which were 3 for our example, just an example of how that calculation would work. Then we're going to say negative of this number. So, or put a credit, you could put a negative 1,500, I like put in a formula. And there is our journal entry. Now we're going to post this to our worksheet and see if it does what we expect it to do. What do we expect it to do? We expect the wages expense to go up in the credit direction, representing the fact that we owe money to the employees, which we'll pay as soon as the payroll processes at the beginning of next month in accordance with the normal payroll process. And we expect the wages expense to go up, bringing net income down. So here's wages expense. We're going to post that to wages expense here. We're in the middle column in I-22 where we say equals and point to that 1,500. It's going to bring this, once we hit enter, it's going to bring this 5,000 up by 1,500, bring us out of balance by 1,500, and bring net income down. So there we have it. So now we're at 6,005. We're out of balance. Net income goes down. Then we're going to post the other side, wages payable. Here it is. Here it is on the trial balance. We're in the middle column in I-13 where we say equals, point to that 1,500, bringing the zero balance up by 1,005 to 1,005. So we have the liability and we have the expense. Note once again that these adjusting entries will have at least one balance sheet account, one income statement account, and often we're dealing with the expense accounts. There are some adjusting entries that deal with income, but because there's more expenses than income, most of them deal with timing issues related to expenses, and therefore oftentimes it brings net income down significantly. Revenue minus expenses, credits beating the debits. So this is net income, not a loss, in other words, and it is going down with these adjusting entries so far. For more accounting information and accounting courses, visit our website at accountinginstruction.info.